let's bring on board Rahul Sharma, Director, Head and Technical and Derivative Research at JF Financial Services. Rahul, thank you so much. Good afternoon. Let's start by talking about the markets, right? When you look at the Nifty, surely for the financial year, we are seeing a very good gain. Today also we're seeing the markets are up. There's expiry as well. What is the outlook that one should expect now in terms of the markets going forward, FY25? Should we expect this green to continue?
Yeah, very good afternoon. It's quite a closing for the financial year, the way Nifty has behaved in the last 2 to 3 trading sessions. Now, the good thing is the correction seems to be over, especially after Nifty has given a crossover above the 2200 resistance area. And now we are ready for 22,600 and above. As we've seen in the past, corrections have been bought into, and this time also it doesn't seem any different. Now, the quality of the bounce back is especially good in the large caps. So if you compare some of the, sector leaders, like be it DLF from real estate or, even the likes of Bajaj Finance, which was an underperformer in the Nifty 50 space. And to top it up, the PSU banks, which have been doing well. So the sector leaders have started doing well. That has, done two things. The correction in Nifty has been shallow, and the recovery is much better in terms of the strength of the bounce back. Now, going ahead, it's simply it's all about sticking to the strength, which is large caps. So we feel that is where the alpha generation will be. However, if you are a slightly more medium to long term kind of an investor, a lot of these small caps and large cap, mid cap names have a lot of good risk, have a good risk reward at these prices. So if you're an investor, this is a good time to start, accumulating these stocks which have been hammered 20, 30, 40% in the recent correction. And if you are a trader, looking for short-term gains, I think in the April, at least in the first half, it should be the large caps which should dominate the center stage.
Okay, large caps which would be dominating in the month of April. But Rahul, in terms of specific stocks, let's talk about in terms of what we have is what we're seeing in a good up move today. Specifically in terms of volumes also, where we're seeing traction coming in, it's IDFC First Bank. IDFC, what is the view on these two stocks, if you could look at it in terms of charts?
Yeah, so when it comes to the IDFC twins, they have seen their fair share of correction along with the mid and small cap space. Now, looking at these two stocks, like especially IDFC First Bank, that is in oversold territory. So a bit of bounce back is something that we can expect from these levels. Today, the volumes are pretty significant, especially in IDFC First Bank. On the other hand, IDFC Limited is relatively better placed, and in terms of the relative comparison, this could rather outperform in the short term. My sense is it's better to look at, like I said, stocks which are relatively better placed. So even in the, private banking space, it is best to stick with the larger names like ICICI Bank, Axis Bank, which are relatively performing well and now are set to take out their previous highs. So it's best to avoid these smaller names for the time being. Once the large caps are done with the move, probably that is when the momentum could spill over to the smaller names.
Okay, point taken. So that's a view coming in on the markets and the stocks. Thanks so much, Rahul, for making time and speaking with us.
If you like this video, then like, share and subscribe to ET Now.